Good evening everyone and welcome to Christmas Admiral Markets webinar. Today is 24th of December 2014. My name is Nenad and I wish Merry Christmas to all our attendees and to all our clients. So basically I know that not many people will be there tonight, but still this is our plan to present you with a nice present for Christmas. It's a VSAE trading system. And because of that, we will be doing this webinar with you. So before I begin, always our standard risk disclaimer. Risk disclosure statement stating all possible risks associated with forex market. By accepting the risk, you're also proceeding further with me. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence and contact an appropriate entity. Before we begin, I need to say that this webinar will not exceed half an hour because I know that today at midnight it will be Christmas Eve and many of you probably want to go out, so I will be pretty much concise with the webinar. And of course, if you're interested on a volume spread analysis trading system, you can give me a email, send me an email, and I will definitely send the system to you. Okay, so let's start with it. First of all, there is a modern concept, basic concept, and VSA trading system. That is our agenda, which we will work today. And let's say a few things about the modern concept of volume spread analysis. It's extensively used in stock market analysis. So volume spread analysis is extensively used in stock market analysis. In Forex, the word volume exactly does not exist because there is no central place of the market to measure how many transactions have been taken. When we talk about volume in Forex market, we refer to tick volume. So we are referring to tick volume. We don't refer to volume in stock market sense. Volume spread analysis is a study of the market forces of supply and demand and the manipulation of those forces through the psychology of crowd behavior. So it's a bit different from our other trading methods. I say it's a completely different dimension. That is the dimension for itself. As you know, we have price action dimension, we have indicator, we have combination of price action indicator, then Bill Williams, then we have volume spread analysis, then we have a point and figure, range bars, Renko bars, chaos. Those are all different dimensions where price exists. Now, in the final analysis, volume spread analysis uses three components on the chart to determine the balance of supply and demand and the probable direction. So through some bars, which you will be shown later, the way that bars can show and do show, you will be able to trade. Those bars which are used as volume analysis tool represent the market forces, market crowd. So those components which we will talk about and which we have mentioned are the amount of volume affecting the price spread, and where the price closes. So all of that basically is fit in volume spread analysis system. Then we have different periods. We have periods of equilibrium, we have trending periods, we have distribution, accumulation. You can refer to previous volume spread analysis webinar and you will know definitely what I mean by that. Today we won't be talking about that. We will be strict because I say again it's Christmas and I want to cut a chase and show the system. So this is all what you should have listened to in previous volume spread analysis webinar, so we won't be mentioning thoroughly, okay? One thing is for sure. During the phases of accumulation and distribution, the markets are manipulated. And volume spread analysis teaches us to basically trade with the crowd, with the big money. It's called smart money in the concept of volume spread analysis. Now we will talk about basic bar concept. The thing is why I do like to talk about basic bar is because there are many systems which are paid for across the internet which use volume spread analysis. Normally due to marketing reasons I cannot name them, but there are many mentors and people who basically teach you how to trade volume spread analysis. The thing is, those are all paid systems, and sometimes they cost a little bit too much. So today we will talk about basic bar concept. The thing is which is integrated in the normal volume spread analysis method system. It doesn't diverge a lot from everything which we talk, but there are surely other ways which you can also trade, but you need to pay for. So we will talk about standard things, about those things which can definitely help you. At least they can help you along with your existing trading system. So when we refer to basic bar concept, we refer to 5 different bars. We have red bar, which is wide range, high volume, climax bar. It can be seen at the beginning of uptrend, the end of uptrend, and in continuation of downtrends. Then we have green bar, which is characterized by low range, high volume. It's called high churn bar. It can be seen at the beginning of uptrend, the end of uptrend, and continuation of downtrend. Don't be afraid. Everything will be included in this system email if you want to trade it and if you want to try it. So all of this which we talk about today basically will be included into the email which I can send you. We have also white bar and gray bar. If your background is black, then those bars should be white. If you use white background as me, that is basically a gray bar. But let's call it now white bar. It's low volume, high range. It's called low churn bar. It can be seen at bottom stops and continuation of uptrend. Then we have yellow bar, which is characterized by low volume and low range. It is also seen at similar places to the low churn bar. It's white bars. When usually we see yellow bars alone with itself, we don't trade it because it's a low volume, low range. Then we have magenta bar. It's a climax volume plus high volume churn. It will give us magenta bar. So both conditions are rare, but it can be shown. This is climax bar to buy. This is volume spread analysis, and this is our chart. These pivot points are all pivot points which I will be including it into the email. So basically you need to know all of pivot points, not just daily, but weekly and monthly pivot points. And you need to be able to draw trend lines and horizontal levels of support resistance by yourself, especially trend lines. This is better volume indicator, and this line on better volume indicates normal volume. When sudden spike happens, you will see the bar going up, trusting the normalized volume. Climax bar or buy bar, it's usually red bar. You can see it here, red bar. It's wide range, high volume, and it can be seen at the beginning of uptrend, the end of uptrend, and sometimes in continuation of uptrend. In this example, we can see a red bar, and this definitely characterizes fresh buying because you can see here fresh buying, and volume is saying that we should buy after this bar. Climax bar or sell bar is also can be red bar. It's wide range, high volume. So usually it appears pretty much above this line but on better volume indicator, and you can see it here. So it can see at the beginning of uptrend, the end of uptrend, in continuation of downtrend. Here it's a huge volume, and you can see how the price has been bought. Here at this point we can see continuation of downtrend. You can see it here, a continuation of downtrend. So this is what smart money usually does. We would usually believe this is pin bar, and usually after the pin bar there is substantial buying. But on volume spread analysis, If pin bar is combined with this red bar, which is above the normalized level, then we can usually think it's a continuation of downtrend. And smart money would definitely leave the position or enter into another sell. So they won't be buying that candle, although it looks pretty much bullish. Okay? We have also high churn bar. High churn bar is green bar. It's low range, high volume. It's called high churn bar. It can be seen at the beginning of uptrend, the end of uptrend, and in the continuation of downtrend. So this is green bar. It's above this normalized level. Then we can see that it can be a sign of the beginning of uptrend, and definitely in this example you can see a high churn bar and the example of uptrend. Now these are all basic bar concepts. During the webinar we will move to advanced bar concept, and you will be using different bar for patterns. So instead of using candlestick patterns, you will use volume spread analysis bars. Okay, and these are all one single bar concepts, so remember this, single bar concepts. And we have low churn bar. What did I say? It's white or gray. Normally if your background is white, then those bars should be gray. It's low volume, high range, and it can be seen at bottom stops and continuation of uptrend. Usually if they are seen at bottoms, it means that the price will reverse. Okay, the price will reverse usually. Low volume, yellow, it's yellow bar. You can see it's low volume, low range. It's seen at similar places to the low churn bar. You can see low volume, low range. There is no movement at all. When you see yellow bars, usually that means low volume. You can see it here, very low volume. And you can also define low volume just by looking at the bodies of these candlesticks. All of the bodies are very, very small, and you can see how they are depicting a low volume. Now we have also so-called magenta bar. It's a climax and high churn bar combined. So both conditions are rare. If you see that, normally you can expect some, let's say, bounce, or you can expect a possible reversal. You can see this example, it is a sign that the reversal is coming, and that there is a big movement in the market. I usually, when I watched how price moved, I usually wanted to stay out of trading when I see magenta bar. Usually I don't trade during that time. Okay, now we will talk about different patterns which you will trade volume spike strategy. There are topping patterns, bottoming patterns, and continuation patterns. Those three different things are methods which you will be using for trading volume spread analysis. Okay? Okay? So those three things you will be using in volume spread analysis. Topping patterns means that the price is definitely very close to important resistance, and when topping pattern appear, you can trade counter trend, so to the short side. Okay. Then we have bottoming patterns. When price is falling down, usually there will be bottom and the price may reject, and it can basically be a sign of a counter trend possible trade. And there is also continuation patterns. Continuation patterns are patterns which appear in trend zigzag, okay, be it down or up, it doesn't matter, and you can trade those continuation patterns in the uptrend and downtrend, it doesn't matter. Okay, so for this VSA strategy, you will be using better volume indicator and all pivot level indicator. Okay. The thing is, you also need to be able to draw trend lines by yourself, because trend lines are also important in the way when you trade volume spread analysis. Okay, this is how better volume looks like. We have a normalized level, and this is the line I can say some sort of moving average for normalized volumes, and these spikes reflect price movement which is abnormal, which is bigger than it was some bars ago. Okay. Usually after these bars show up, you can expect some of these three things to happen. So we have, these are the patterns which you should be trading and concentrating. So guys, these are advanced patterns. These were all one candlestick, one bar patterns. One yellow bar, one white bar, one green bar that can help you in your trading. But these are the patterns which you will be using for trading topping, bottom, and continuation patterns. And if you want to trade this VSA strategy, I advise you, definitely you will be given this slide because you need this. It's not easy, I know. You need to memorize somehow these patterns. And also by practicing, you can also see how some of the patterns which are not included in the slide can appear and what do they do. So just to let you know, volume spread analysis is the science for itself. You already know that Forex is the science for itself, and volume spread analysis is pretty much very complex and thorough method for Forex trading. So if you want to learn about VSA strategies and trade VSA strategies, you should allow yourself to deeply involve your mind in this, because it's different from price action, it's different from all other things, so you definitely need to focus yourself on, to dedicate yourself. And this is the good start for you, this VSA strategy, because by using these topping, bottom, continuation patterns, you will be able also to spot some of the patterns which are not included and trade it successfully, okay? So for topping patterns, we can have a climax bar red followed by high churn bar. So we have red and green. For then we can have high churn bar followed by climax bar, green, red. Then we have low churn bar followed by low volume, so it's white or gray. Gray is usually W, so it's the same, gray or white, and yellow. Then we have bottom patterns, low churn bar, white followed by high churn bar, then climax. They go in this sequence. So gray, green, red. Then we have low churn bar, white followed by low volume, low range, then climax. White, yellow, red. Then high churn bar followed by climax, green, red. I mind you that if you use divergence, this can also be a good complement to your divergence, because when you see bearish divergence and topping pattern, you can usually identify that as a signal to sell. Bottom patterns appear, and then if bottom pattern appear and you spot also divergence, bullish divergence, you can trade also. But this is also good for spotting possible reversals and retracements, so you should pay attention to it. Continuation patterns, we have low churn bars, those are white, as well as low volume and low range bars. So it can be a sign of continuation of uptrend. Usually it's a pullback, so it will appear as white and yellow. High churn bars followed by climax bars can be a continuation of downtrend, and they will appear as green and red. Okay, what does it mean on the charts? You will see. So this is also part of your education. Volume climax can be used at the start of the uptrend, top, downtrend continuation, and it's red. High volume churn can be used at the bottom, at the top, downtrend continuation, green. So this is all one bar rules, and these are all multi-bar rules, advanced bar rules. And this is how it looks. Okay, this is how it looks. So the thing is, before I proceed with slides, you should first locate the price. So you should be able to differentiate whether the price is too high, if the price is too low, or there is continuation. So this trading system definitely requires you to be able to spot good support if the price is at the support for a possible counter trend buy, good resistance for a possible sell, and uptrend for continuation entry or downtrend for continuation sell entry. So either buy continuation or sell. So sell trades are topping patterns close to important resistance. Buy trades at bottoming patterns close to important support. Okay, this is how you should trade. And continuation patterns show only in trend, when we have uptrend or downtrend. Okay, those are continuation patterns. In this example, we can see climax bar red followed by high churn bar. So it's red green. What did we say? What that means is topping pattern. Okay, topping pattern. So in this example, you can see topping pattern, and you can see what basically happened. The price went down. Look, it went down. And those levels are very important. Daily resistance, weekly resistance, trend lines. So usually when pattern appears, you should be paying attention to either divergence or important support and resistance level. Now you can see this pattern. It goes in this sequence. So you can see it's a continuation pattern. What did we say? It's a continuation pattern. Okay, you just locate it here and you can easily spot it. Okay, continuation pattern to the downside. You can also see it's very easy to spot. You have a green red and then red green. Okay, green red and red green. So green red appeared the first, it was the top, and then red green appeared the second, it was the bottom. So nice swings. Okay, also very close to daily pivot point, very close to trend line. So basically this is how it can help you in your trading. Now we have high churn bar, which is green, which is also followed by climax bar red. It can be what we said, a continuation of downtrend. So green red combination, where did it appear? So you just need to know where did it appear. It appeared here. You can also place trend line here. Now it's a continuation of downtrend. So volume spread analysis tells you that this is a continuation now on downtrend on these bars here. Okay, so you can see red and green. So high churn bar, we see continuation of downtrend. Okay, then we see one pattern, white gray bar. It's low volume, high range. But look at this, can be seen at tops, bottoms, and continuation. So this was definitely at the bottom, and look, when white gray bars appeared, the price was heavily bought into. Okay, and we have low churn bar, white followed by high churn bar, then climax. We have white and red here, no green, but white and red can also be basically a sign of a possible buying at the bottom, and that appeared here. Okay, so these are all little cues which will help you and can help you in volume spread analysis trading, and all of these slides will be included in your in the email if you're interested to try to trade this. And if you're not into volume spread analysis trading, it can definitely help you to see whether there will be some important bounces, important reversals, and maybe a continuations. So the thing is, it can be used in conjunction with other systems. Okay, it can be used in conjunction with other systems. Always use trend lines and all pivot levels for trading. It can also give you hint about reversal and continuation. It definitely works on each pair. It works on any time frame, and we use 1 hour time frame for intraday trading. Okay, so once more, guys, to be able to trade it, you should first locate the price, okay, to see whether it's very close to resistance or very close to support. You should always sell only when the price is at the resistance or in a continuation of downtrend. You always buy on the support or continuation of uptrend. Continuation patterns appear only in trend. Okay? To follow the smart money, you need to be able to spot reversal at its very core. So either at the resistance itself or at the support itself, because smart money will be selling from here and buying from here. And usually retail money will join in I call it dump money, but it will join in at the middle of the move. But if you're able to trade with smart money, so exactly at the resistance or the support, that means that you're trading with the smart money. So you will be exploiting the biggest possible price range for your trade. Okay? So once more, these patterns are included here. So climax bar, for example, followed by high churn bar, it can give you a sign of reversal, and that happened here. Then we have a nice swing, so green, red, red, green. So green, red appeared here, and we see selling. Then red, green appeared here, and we saw buying. Okay. These blue bars basically are normal volumes, so we don't take those into account. We only take those deviations which appear as those colors: red, green, white, gray, yellow. So green, red, continuation of downtrend easily can be seen here. White, red, or white, green, red. This example is white or gray, red. It's basically buying of the support. So definitely you will be needing these slides, and you will be needing this one, because it will help you at least at this beginning to differentiate between all of those patterns which can appear on the charts. Okay. So guys, if you have any questions, you can ask me. As I said, today we will definitely be a little bit shorter because it's Christmas. Yeah, Lois is asking, it might be a great Christmas present. Yeah, it can help you. Basically, Lo, this is beginning for volume spread analysis. This is the basics, and this can help you with your system. Definitely, if you want to, for example, you have. You can see that this is very strong level. You can see these bars. You can see that selling has been happening. Maybe your system is saying go sell, and you see these bars. You just saw that. You just need to refer to slide, and definitely that will be a double confirmation for you to sell. Or let's see, you see this. You see a big spike. Your system is telling you go buy it. Okay. This is double confirmation. Here also you can see one bar signal. Low volume, high range can be seen at bottom, stops continuation. This is definitely bottom. Okay, signal, you can see a spike here, and bang, the price is going up. So it can also serve as a system for itself, and also it can be seen as a double confirmation for existing system. And on Monday, yes, I will be holding on Monday. That will be the last day of this year. Maybe we can grab some trades, but on Monday I will be doing trades which can definitely be interesting only for one day. So that will not be interesting. It will be only interesting to trade on Asia, London, or New York, because it's New Year and we don't trade. We will make a little bit of break till 5th of January. Okay, so Monday will be the last session recap, and yeah, you could see this session recap. It ended in 2 wins, 2 losses. Basically, we had a loss for euro-dollar cable, but we had a good Aussie trade and good dollar-CAD trade, and definitely GBP dollar revised trade gave great pips today in this slow market. Okay, so definitely there will be one more webinar on Monday for a conclusion of this year, successful year. Okay, so guys, if you're interested in this system, definitely send me an email. I wish you all Merry Christmas. I wish you very, very happy New Year, although it's not a New Year, but spend it in joy with your friends and family. May God bless you, and may you get all green pips available. So thank you, and I will talk, guys, with you soon. If you're interested in volume spread analysis system, send me an email. Cheers and trade safe.